2023 was a strong year for Indian equities, be that for large cap, mid cap or small cap. As we look ahead in the medium term construct, we think markets are an interplay of three factors. First is that of earnings and valuations. Second is in terms of sentiment, and third is in terms of liquidity. The interplay of each of these three variables drives our medium-term outlook of Indian equities. Starting with earnings, corporate India earnings doubled over the period from 2020 to 2023. This came on the back of very strong share gains from the unorganized to the organized segment. We also saw significant margin expansion for corporate India, as well as inventory gains, especially in the commodity sectors, which went through a very strong tailwind in 2021, which helped reduce the balance sheet and clean up the balance sheet for corporate India. Going ahead, we think that the next doubling of corporate earnings is likely between 5 to 7 years or maybe even beyond. While this is a moderation compared to what we've seen in the last 3 years, one should also recognize that this doubling of corporate earnings is going to be backed by very clean and strong balance sheets, as well as improving capex of corporate companies in India. Coming to the second factor, which is that of sentiment. Sentiment in India is at unprecedented levels. Everything that has to go right for India is going right for India. There are some structural sentiment drivers as well as cyclical sentiment drivers. Structural drivers like our young population, our growing per capita and aspirational growth of income levels, all of them are very well flagged. We are also seeing some cyclical sentiment factors like what's happening in China in terms of its aversion in the geopolitical landscape benefiting India at the moment. Coming to liquidity, we are now in a zone wherein SIP flows through mutual funds as well as various other vehicles like the EPFO provide a strong foundation of financializations of Indian households to the equity markets. Along with that, we are likely to see growing interest by foreign institutional investors into Indian equities as well as by the high net worth individuals in India wanting to participate in this growing equity tribe of Indian equity markets. Given this, the fact that earnings are likely to moderate, the fact that sentiment is at its best, and liquidity, which can continue to keep growing, we think it is important to look at valuations. Valuations for large caps continue to be in the fair value plus zone, whereas for mid cap and small cap, it is at a slightly more elevated level than what they have generally seen over the course of the last 20 years. Markets go through cycles. Sectors and themes which led in the past give way to newer themes and newer sectors. If you look at the performance, the two standout themes prior to COVID in the last decade were that of consumption and financials. We think from a medium-term perspective, the next 5-7 years is likely to be the case for the investment theme as well as for the exports or the outsourcing theme. Specifically to the investment theme, we are big believers of the camp that both on the manufacturing side as well as on the infrastructure side, there is a lot happening in India which provides multiple opportunities for companies to execute and participate from. Similarly, from an outsourcing angle, we do think that India's competitiveness is on the rise globally, and while there can be some kind of a pressure given the recessionary outlook in multiple advanced economies, we think that this too shall pass, and therefore we would use this as an opportunity to further increase our allocation into companies which are likely to export competitively to the Western world. We do think that markets at this point of time, the best approach would be that of asset allocation, wherein one enters into multiple asset classes. So products like Balance Advantage Fund or multi-asset allocation funds provide a very good alternative for investors to choose from. Along with that, we think that funds which can go anywhere, which are unconstrained, like the business cycle fund, which can invest across sectors, across themes, across market capitalizations, and across geographies, provide a very good avenue for investors to consider investing in. Also, we think that it makes sense given the reasonably elevated multiples, especially in the mid and small cap, to consider staggering your investments to get into equity markets in a timely and disciplined fashion at this point of time.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.